Good morning, traders. Hello, everyone, and welcome to this Monday morning live trading webinar. Myself and Admirals, we would like to welcome on board all the new and, of course, the existing traders with us. Hello, Darshan, Cherry, Mikai, Jasper, Anka. It's a pleasure to see you guys here now. Because strictly at 10 o'clock, we have to stop this webinar due to another webinar will start. So let's start immediately. For any questions, please do not hesitate to put them right on the chat boxes below, and I will answer them. Hello, Jonathan from South Africa. Fantastic. People from all over the world. And it's great we grow up this family channel here. And I promise you guys many great things on the trading will come. I got all your comments, all your feedbacks, as I said, from the Zoom account. When you we stop the webinar and you leave the feedback, it's anonymous. We don't know who leaves the feedback. So I encourage everyone to leave your feedback. All right. And let's start. First, to make sure you understand that this content is for general information only, and it doesn't intend to give any personal investment or recommendation and advices. And of course, make sure today, after we finish the webinar, I'm going to prepare and record the podcast for the week. Exciting things to listen today, trust me. So keep an eye on your website, on the notifications on your Telegram, because we put it on Telegram as well, on Instagram channel. If anyone is not yet on Instagram channel, please type it on the box below, and I will make sure to send you the links. And if you haven't downloaded the mobile application yet here at Admirals, please make sure you do so. Let me share the MetaTrader platform. Due to some technical problems with my browser today, I won't be able to go through the Premium Analytic portal to read the newspapers, the news headlines. I haven't read them anyway yet because I cannot log in. So MT5 platform. Now, slowly, I will introduce you to few brilliant indicators I used when I started trading, and I was trading with them for years. Now, you can see here, this is the Bollinger Band default settings, how you can add it on your charts. You go here at Insert Indicators. It's a trend filter indicator, so it's a trend indicator. So you're going to find it at the trend section. You click on the Bollinger Band. You can change the color. I just don't mind. I just left it as it is. Period. It uses the 20 moving average, which is brilliant for Forex traders and indices traders. And deviation, it's by default at 2. It's really nothing else you can change here. So you click OK, and you have it on your chart. Now, why it's a brilliant tool? Because first of all, just to make sure, we said that it's a trend filter indication. Okay, and it's not an indication sorry guys, someone asked for the Telegram channel, so I'm sending it on the chat boxes. Please, everyone, make sure you follow us on the Telegram, and you can comment on the post. I also am very active there. I reply to your comments. You can ask anything about trading. So back to the Bollinger Bands. How can we use them? We can simply do our analysis about trend and we can use them as filters. Ladies and gentlemen, just listen what I'm saying. We are going to use them as filters. We're not going to use them to trade Bollinger Bands themselves or any other indicator. We never going to use them to trade them solely without doing market analysis and, if you want, price action analysis. All right. We use them as confirmations, not as strategies themselves, without taking in consideration any support resistance and any trend development or ranging markets and so on. So people, they say that you can buy on the lower band, you can sell at the top band. I can show you millions of examples, 1,000 examples that they are not work this way. But when you're going to use them as trend filters, like I use them, and I will teach you how to do it, then you're going to just have much better understanding of them. Okay, and you're going to utilize them to the max. Another two indicators I add to my charts, it's the 50 moving average and the 200 moving average, because they are widely used by technical analysts all over the world, and prices has this tendency, when it touches these dynamic moving averages on the higher time frame, especially on the higher time frame, they tend to give very strong bounced off, or if they're going to break through, they're going to just do it with momentum. David, great question. EMA or SMA really doesn't matter too much. This is one is the exponential. If you put the single one, it's going to just not make any much difference, because it counts the close. The difference between EMA and SMA is that the EMA puts more weight on the recent closing prices, but the simple moving average put more weight, put equal weight on the period we are counting. Okay, so I don't mind, either one is fine. By default, I think they came on the exponential, so just leave it like that. Now, we can see on Friday, last Friday, the market here is the dollar index, and the market made this bearish engulfing candle here, also rejected on the 200 moving average. Today, of course, we do expect to see continuation. However, unless we see the price breaking below, what I'm saying here, that of course we expect to see continuation, it's just a statement and not a fact. So what I want to see the price moving below this area in order to start selling. However, there is so much enthusiasm in the other currency pairs that they just pushing the prices lower. If we have a look at the DAX 40, that's the weekly, we close with that strong bullishness. Now, what do we see here? We see that we are right at the top band of the Bollinger Band. Now, what can we do for breakout traders? They use this. Oh, how did I draw this line here? My goodness. For breakout traders, they use the Bollinger Band's upper and lower levels to enter the market. However, I don't use them that way. What do we have here? We have this higher price, so the market, if it's going to break and close above, I'm happy to start buying. The FTSE 100 clearly here, it make a new high. So what can we do here? We want to wait for price to retest this area here, if it's going to retest it, and we definitely going to look for longs. Of course, we need to do our analysis. All right. It's very easy for traders to get caught by an indicator itself. I don't blame you for that, but please, if let's say we're going to see a reversal here today, we're going to use fib retracement to see if the price is going to retrace and come at 38.2, or it's going to come at least to retest this area of support. So it's going to give us valid reason to participate. We don't chase the prices, especially when we are using leverage like in Forex and indices, and we need to have a stop loss in the market, so we cannot afford to just start chasing prices, because stop loss, they will be very, very tight. Dow Jones is one of the good pairs, in my opinion, for today, if we're going to see some continuation, because the price is above the 20, the 50, and the 200 moving average, then we can move towards the higher area of the Bollinger Band, also towards the higher area of the prices. That's the high here. So if we're going to continue on the lower time frame, some retracements here around this area of, you see this box here where we broke above the box. So here it's the area of resistance. Broken resistance can act as support on these bounces, and we can initiate some positions. Nasdaq is fighting at this support area here. We bounced with this bullish engulfing last Friday due to USD weakness. But what I don't like here is that we are below this area of the 200 of the 20 moving average, and all the moving average are pointing downwards, and there is no reversal like double bottom like we have here, double bottom reversal from support. Then it's different story. We can trade our ranging market as per the checklist I share many times with you. I can share it again. Let's have a look at the currency pairs, and there are some opportunities I spotted on the weekend when I was doing my analysis. Let's start with the pound against the dollar. I didn't change yet all this, but I will do so. So pound against the dollar, we have this, as I said, on Friday, all the currency pairs against the dollar, they put strong price actions, and they are indicating that weakness in the dollar may come today and in the following days. All right, so on the pound anyhow, it's a bit weak among the other currencies if we see the other pairs. So right now we are trying to break above the 200 moving average, above the 50 and above the 20 moving average. So that looks bullishness may come, but in my opinion, I don't see that strength in the pound. On the euro as well, we are approaching this area of resistance here. USD CHF, that was, let's say we have room to move until this area of support. So this can be a good one for today. Now, how do we trade intraday trading? If you go to 15 minutes, if you go to 5-minute chart, guys, we definitely need to do our analysis with the lower highs and lower lows. This is the USD against the Swiss franc. And if we say that we want to sell the dollar based on the technical analysis and fundamental analysis, we want the price on the time frame we're going to execute to give us these lower lows and lower high cycles. We have it here, and the price is coming to this area of possible retracement. So we will see what it's going to happen here. If we go to the Aussie against the dollar, this one, it looks that it's one of the best currency pairs, in my opinion, to look for longs, because the recent price structure, it just indicates bullishness. It didn't do like the pound, here. It broke the structure and it made this lower low. No, the Aussie against the dollar, it maintained its bullishness bias without new low in the market. So we only have equal low here and we have higher highs. So that's brilliant. We can keep an eye on that. Also, on the podcast, I will explain the fundamental side of the Australian dollar this week, and it makes it a bit lucrative for buys. New Zealand, pretty much the same, but we broke the structure here. USD Canadian dollar, it's one of the pairs, as I mentioned in previous webinars. If you understand, I initiate trades here on this pair. I'm still in the trade. What did I do after I saw this consolidation here and the market closed well below here with this bearish candle? I told to you guys many times, we can use the 50% area of the long bearish candle to initiate some sell positions. I use the fib retracement, I measure the candle, or if you don't need to use a fib retracement, if you want, you can just measure how many pips are here, 200 pips. I put it somewhere on the 90 pips. I had my stop loss somewhere here, and I'm waiting for the price to give me 3 to 1. So I measure that I can make from this point here about 300 pips before the price is going to touch. If the market is going to give this trade, it's going to be a good one. So I'm still in this one here. USD against it's this one here. Let me just fix it. USD against the Japanese yen. Is it a divergence on the DAX, or was it a divergence on the DAX? Let me just check for you, Cherry. One second. DAX. Sorry, I will just do it on another platform because it's easier instead of just flipping back and forth. Yes, that was a divergence. There is divergence on the DAX. Okay, for your information. So USD against the Japanese yen. The market created this move here. However, I would love to be bearish on the US dollar and bullish on the Japanese yen. So I would love to sell this one here. However, because you see, guys, the market didn't make lower low here. It just broke false break below, and the buyers, they stepped in very aggressively and they pushed the prices 100% at this area. Now, this market sold off due to dollar weakness. Now, what can we see? We said many times that we trade risk and reward probabilities. We don't trade based on I'm going to enter here, and if the market it's going to shake me a little bit, and it's if I sell here and the market and my stop loss is there, if the market is somewhere here, I will say, oh my God, I don't want to lose because the market is moving, and I'm going to just kill the trade, or I make profit, let's say 0.5%, and I will get out of the trade. What we said, we want to stick to our probabilities and to our methodology, that even if we get 30 trades out of 100 trades correct, we still, with 3 to 1, we are still well ahead in the game, and we don't mind to have 70 losses out of 100 trades, because we know that we can make a very decent profit. Okay, considering the losses, definitely. Now, if I'm keeping an eye on this one, to be honest, and if I see the market moving well beyond this bearish candle, I at the least if I'm going to place to 70, so 135, let's say, if the market is going to come a little bit deep inside this bearish candle, at the least I will try to catch it from as high as possible to sell it and have my stop loss somewhere here, so I can make, if the market it's going to start ranging and it's going to come to retest these lows here, to make 3 to 1 by the time the price is going to come here, because I don't know if it's going to continue falling. But on the other side, if the market it's going to just push well beyond this area, then it's okay, let it be. At least I tried. I said to myself, I do have 70, I can take 70 losses out of 100 trades, and that's fine. Okay, so for this one, definitely it has this bearish implication, but with a bit cautious, because we didn't have a new low here. Like, or possibly like this area here, we closed below this low. We had lower low and we closed, and then the market pushed backwards, and then it came to make a new push to the downside. So I will keep an eye on that. It's not that, in my opinion, I don't see a great high probability trade, but saying that, if the price is going to retrace a bit deeper here, I would like to maybe sell it, have my stop loss somewhere here, and make sure I have 3 to 1 room until there. But if I don't have 3 to 1 room until here, I may not initiate the trade. Aussie against the Japanese yen. Let's put the Bollinger Bands. So Aussie is very strong. However, guys, you have to understand that we are approaching this very strong area of resistance, and we have also a trend line here, trend line resistance. So the market may find some obstacle to push through. Japanese yen, it's a strong currency for this period. Also, Australian dollar, it's a strong currency, and it's better due to correlation of to trade two strong currencies. It's better to find a weak currency and match it with a strong currency. The euro against the yen, we had this. The euro against the yen, we had this area of support around the 200 moving average. The market didn't. You see, guys, if you don't use some trend filters, we are in a trending market, and we don't use some trend filters, we don't have, let's say, this 200 moving average, we can definitely see that these two rejections here with a long upper tail, we can take them as pin bars, and we say, okay, I'm going to sell in this pin bar, and it didn't work because the next one took the stop loss. Then I'm going to sell in this pin bar. Maybe it's not going to work, but we don't. The last thing we're going to see on the chart, it must be the indicators and the price action. The first thing we must see on the chart is how the market is moving, where the force is going. Is it a bearish momentum? Is it a bullish momentum? If yes, then we're going to plot our support resistance areas, and we're going to wait patiently the price to come at this support resistance and either execute from there, or we're going to wait to see some sort of price action confirming the direction, and then we can initiate some trades. Okay, keep it simple, keep it consistent. Euro against the Australian dollar, it's nothing here. Nothing here. Some pairs you guys asked. Pound JPY. Pound JPY. Let's have a look at the gold and crude oil. They're still bearish. Pound Japanese yen, I would like to move it close to here. So pound against Japanese yen, this one didn't come anyway, so better to take it away. let's put our trend filters and see what the market is showing us. Now, the pound against the Japanese yen, of course, we had this rejection here. Now the market is trying to push backwards. However, there is room to the upside until we come to retest these areas here. I don't know if you guys are trading, if you are bullish here and you're holding some positions. From the selling side, I would like to see the price come somewhere here, at least 50%, ideally 61.8%. Why? Because it's the last broken, this one here, it matched very nicely with the 61%, and it's exactly this lower point here. Why I would like to see the market coming all the way up there? Simply because I have two confirmations that sellers maybe appear strongly from this point and push the price to the downside. That's a 61.8% fib retracement, plus the last broken swing in the market that it was support, it broken, and it never retested as resistance. So we can see some retest, sort of retest around this area. But to start selling right now, I wouldn't do that, because 38.2%, it's not an ideal place, in my opinion, for Forex market to be traded. And also 50% here, 50% maybe can be used, but in this area here, I want to see price action. Here I can put a limit order, because sell limit order, because there are some strong confluence that the price might be start selling off. But here on the 50, because there are no many strong confluence, I would prefer to see some rejection from the price action. Okay. Can't catch retracement on gold. Yes, yes, Rumen. I was looking for that as well. It's been a while, but even here, we were expecting the gold to come in and push a bit lower to give us that entry or some rejection, but it just pushed to the upside, so we didn't catch the trade. But that's okay. That's okay, no problem at all. There are so many trades to take. And guys, please remember, and also I will try tomorrow to share the checklist. I update the checklist for you guys. So if we take 100 trades and we go for 3, 2, 1 when we win, and we win only 30 trades, that give us plus 90%. If we lose 70 trades, that's minus 70. So overall, we are plus 20% ahead. So this is very low probability for trading, but saying that, maybe this 30%, it's going to be 35 or 40%. Usually it's around 40%. So even with the worst case scenario, you can still ahead of the game if you start thinking in these terms now. Ladies and gentlemen, as I said earlier, because there's another webinar taking place right at 10 o'clock from the same account, so I need to wrap up for today. I will see you all tomorrow, and I wish you happy trading. Thank you so much. Bye for now.